Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the head of CBA is now facing calls for a sacking. But first, on Saturday, the US released its employment data, and that showed non-farm payrolls rising by 209,000 jobs last month in broad-based gains. The strong June data was revised higher as well. Average hourly earnings rose 2.5%, maintaining the pace of the last 4 months. This is far ahead of US inflation, which is currently running at 1.6%. Their jobless rate is now 4.3%. These signs of labour market tightness will likely clear the way for the Federal Reserve to announce a plan to start shrinking its massive bond portfolio. And it will be likely to keep the Fed on track for at least one more rate hike this year. Rate rises are expected in the UK as well, maybe more than markets are expecting. In Canada, their unemployment rate fell to 6.3% in July from 6.5% in June, its lowest level in nearly a decade, and job creation is its strongest since before the global financial crisis. But wage rate growth remains very weak. The average hourly wage increased a mere 1.3% over July of last year, the 12th consecutive month of very soft wage growth. And back in the US, their trade balance came in at a deficit of $43.6 billion, lower than what markets were expecting. The goods portion was a deficit of $65.2 billion, while they posted a services surplus of $21.2 billion in June. However, while that may have beaten expectations, there's little change from the same month a year ago. In Europe, the EU has imposed new sanctions on Russia over the transfer of EU turbines to the Crimea, which Russia annexed by force in 2014. The EU sanctions build on those by the US. In China, a monumental shift is underway. The Chinese used to be substantial savers, but that is changing, and the drive to own a home becomes a key objective for most households. As a result, the country is quickly adopting debt into their household balance sheets. The shift is swift. In Australia, the knives seem to be out for the head of CBA. The latest scandal over the way an ATM system was rorted by money launderers and the way the fix was handled seems to look like the last straw for some observers, the media and politicians. The fact that the bank was the one who brought it to the attention of the regulator seems to count for little at this point. The pressure for change at the top seems to be high at the present. In New York, US Treasury 10-year yield is up 3 basis points on the non-farm payrolls report to 2.26%. The price of oil is up slightly to just over $49.50 a barrel, while the Brent benchmark is just now over $52.50. The price of gold is down, however. It's down by $9 to $1,259 an ounce. And the Kiwi dollar will start today little changed at 74.2 US cents, while the cross rates were marginally lower at 93.6 Aussie cents and 63 euro cents. As a result, the TWI is at 76.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.